Hey guys, good afternoon. It's Brett here with Directors. Thank you for joining today's live event. So today I wanted to focus on appraisals, kind of what really is an appraisal, why that we need them in the lending industry, what are some of the do's and don'ts about them, and kind of how things work for us. So ultimately, guys, first and foremost, what is an appraisal? So I know throughout a buying process, there's sometimes inspections and appraisals, all these different terms. So ultimately, the appraisal is the piece that's really diving into the valuation of the property. Now, yes, the appraiser walks through it. He's going to take a look at the condition of the home and maybe call out if there is a major concern or health or safety issue or repair needed, but it's not an inspection, from that perspective. It's much more about the valuation of the property. So, for example, you're buying a home. You've agreed to buy it from the sellers at $700,000. Well, from a bank perspective, if we're lending money, or from a mortgage company perspective, if they're lending money, we want to understand, is it worth $700,000? So that's good for both us as a lender and you guys as a buyer. Or again, maybe in a refinance transaction, we want to do a refinance. We're still lending money to you. The house is ultimately the collateral of the lending agency. They want to understand that value. And that's great for you guys too. So here's some particulars of it. So in it, guys, a few things is let's maybe dive into the overall appraisal process. So, as an industry, there was some big appraisal changes post '08, that blow up era, to where appraisals are now run through what we call an AMC, appraisal management company. So again, a lender helps to order the appraisal, but the appraiser does not work for us. Now there's relationships we have with appraisers that have done great business, great, timelines, communication, all that for years that they can be on our panel. But the AMC, this middle company now, appraisal management company, helps to manage it. So when we get to the stage of ordering an appraisal, we place the order. The AMC now goes out and contacts the particular appraiser for each deal. So again, from a lender, we're not picking the exact appraiser. We're picking the AMC, which has a group of approved appraisers for different areas. That is one of those guys would go out to the property. So that helps with some of that compliance from the federal level and making sure, going back to that '08 era, there's not, any scams or fraud or things that way for us. So that's basically how it is. Now, what is the appraiser themselves looking at? When they value the property, some of the key things are going to be very basic. What's the age and condition of the home? Have there been any updates to it? What's, of course, the size? What's the size of the land? Where's the location? Is it on right next to the freeway, or is it on 3 acres? I mean, all those kind of factors. And I oftentimes relate it is when a buyer is going out there, a buyer might be willing to pay more for a house that's more private than, stacked next to its neighbor. A buyer might be willing to pay for more for a house if it's brand new. So the appraiser's mindset is trying to say, what does the market perceive this property to be? Now, the way they do that is they'll go through, they'll do a physical inspection. And again, I'll be hesitant to say inspection, a physical walkthrough of the property, take a look at it, take pictures, visit the area. And then they're going to do a lot of comp work. Oftentimes they have a client go, man, I'm surprised it's so expensive. He was only here for 15 minutes. Remember, that's a very small percent of what the appraiser does, is to see the physical property and take photos. But most of it is now the comparable work. Do all the research. What homes have sold in the last, 3 to 6 months in the area? Typically a similar location, but then they're going to say, I got to find properties of the same size, same age, same updates, same quality. Now, you're never going to find typically a carbon copy, so they'll make some adjustments. But a lot of an appraiser's work, unlike, say, an inspector, is sitting at his desk doing that comp work, where an inspector is in the field, in the house, crawling through the crawl space. So that's kind of the two differences there, guys. So many times they'll go through and they'll review, okay, hey, here's a comparable number one, meaning a home that is sold that is comparable. Now, in an appraisal, typically you're going to see somewhere between 6 to maybe 8 comparables that are in there. I would say normally the majority of those are going to be closed sales. It's hard to use a listing as a comparable because it hasn't sold yet. You don't know exactly what the price is. So they will occasionally put 1 or 2 in there to help justify it. But remember, it's got to be closed sale. That helps out with it. So those are kind of some of the things the appraiser is going to look for and go through for us. Now, with that for you, as far as maybe more around the process, let's say you're buying a house. So typically the process would be you've negotiated with the seller and you've come to an agreement. You have a signed purchase and sale agreement. The next steps would be is now moving forward with the lender. We would help to do initial loan disclosures and prepare all the federal disclosures for you to review and e-sign. At that point, you're eligible to order the appraisal. Now, some clients would still wait a bit longer until maybe they finish their home inspection, making sure, hey, do I even want to proceed with the house? Is there any further negotiations or repair I need to ask the seller to do? Once you're through that piece and you're confident moving forward, then we would place that official order on the appraisal. I would say at the moment, the average turn time for an appraisal is about 7 days or so. We order it on a Monday. Within that time, they come out to the property, they take a look at it, they do all that comp work I mentioned, prepare that report, send it in. It's about a week. Now, I will mention one caveat. So, all the loan programs we do will go through this AMC except VA. VA is going to be the only loan at the moment when we order it, instead of going through our AMC or different AMCs we have, it's being ordered directly with VA. There's pros and cons to that. VA wants to manage that appraisal for the veteran. The only knock is VA gives up to 14 days, so that's business days. So essentially 3 weeks for a VA appraiser to complete it. I will say that's rare, but occasionally they take all, 3 weeks to do it. So there's a little bit of timing difference on VA, but again, the same mindset of who's and how they are approaching that appraisal. So that's a couple of updates. Now, let's say we're doing a refinance. In a refinance case, there's typically not an inspection. You already own the home. So it's more of, hey, you would apply for refinance. We would issue the disclosures. You would acknowledge those. Then we could collect and order that appraisal for you. Now, one piece, guys, is you'll see most of the time an appraisal is one fee. There's very few that are paid before closing. And the reason for it is typically appraisers require completion, payment on that completion to say, well, if the appraisal is done, there needs to be a payment. And unfortunately, sometimes an appraisal is done and the loan never closes. Very rarely, but that's one piece you'll see is sometimes that's collected up front versus at closing, like all other traditional closing costs would be. So now that we've talked a little bit about what is an appraisal, how the appraiser really dives through it, what's the process, how does it tailor into your loan? So let's start with the purchase for you. So ultimately on a purchase, if you've agreed in this example of a $700,000 price, well, the goal traditionally is to make sure it's worth at least $700,000. So when an appraisal comes in as a lender, we're going to review it for a few things. We're going to review it to see, hey, is there any particular concerns the appraiser addressed? Such as, hey, when I got to the property, I noticed there's evidence of a lot of water leaks, or I noticed there was no flooring, or I noticed the house is halfway through a remodel. There's been some unique ones, right? He's going to, in a sense, be the eyes of the bank or the lender that went to the property to check it out. Now, typically, unlike an inspector, these are big items. Like I mentioned, see, no flooring at all, or major remodel, or huge leaks or concerns, or safety issues. Hey, there's a big deck in the back with a huge fall and there's no railing. So it's pretty major items, but that's one piece we're going to look at is, hey, did the appraiser address any big concerns with the property, health, safety, or condition? I would say in general, almost any buyer that has walked through a property would have already noted those. So it's pretty rare there's a surprise that pops up, but that's one piece. Now, the second piece we're going to look at is his evaluation of the comparables and the overall value. So we'll look at it. For example, there are some parameters to say, okay, did this appraiser make too many adjustments? Is the overall adjustment too far off? Do we think these aren't the right comps? Now, it's not our way of trying to, question the appraiser too much, but just a little verification to say, hey, is his adjustment and his approach to the value analysis within guidelines? So those are the first couple pieces. I will tell you in general, most of the appraisers, especially the great ones we have through our AMC, there's rarely a lot of challenges with that because they know the guidelines and that's exactly how they put the report together. So we would evaluate it. Now, if it came in, typically say at value or above, that's great. And with no work orders, that's great as well. Those are the two main things we're looking at. Now, if it came in for any reason below value, two approaches. We can always say, hey, we, meaning us as a lender, or you as a buyer or an owner, or even your agent say, I don't agree with the lower value. We want a reconsideration. There is a process to submit additional comps and things. Again, very rare that comes up, but I like clients to know, guys, if something happens, it's not, hey, we're dead in the water. There is absolutely an approach. More often than not, if an appraisal came in slightly low, may go the other direction, the sense of, hey, I know the comps are tough. Let's use this as a negotiation tool to potentially go back to the sellers and say, hey, unfortunately, even though we agreed at $700,000, it looks like the appraisal can only justify $680,000. We would like to renegotiate the deal. Now, this is not a guarantee, but it can open up those negotiations to have you and the sellers renegotiate the price point for us. So that would be how we'd address something on a value piece. Now, if it again is a refinance, once again, there's not a seller involved. It's simply here's the value. And if someone doesn't agree, we can do the reconsideration process. Now, let's say there was a couple of work orders called out. So when we have those, if it came in and said, okay, hey, came in at value, things are fine, but it is subject to X, Y, or Z, installation of flooring, repair of this, something of that sort. Typically, most buyers would renegotiate and say, hey, sellers, there came in with an order of work. We would like this completed before closing. Now, there are cases where a seller cannot afford it or is unwilling to, say, a bank owned that sells the property as is. In that case, we have a holdback saying, hey, we are willing to continue the loan as is prior to the work being done, as long as we have some contractor bids and funds set aside. So I like to mention that again is, guys, we have many ways to work through things, whether it's a little difference in value or it's a work order item or two that came up for us. Now, we only want to work through these if you as a buyer feel comfortable, but if so, there's tons of options we do that still help us proceed through it. So hope that gives you some good feeling of kind of what's the reason banks or lenders or anyone does an appraisal, how the process works, what the timing looks like. Hey, what are we looking for when it comes in? And if it came in with one or two small issues, whether value or work order, how we can address those to help. So as always, feel free to reach out anytime with questions. More than happy to chat through those. Thanks again for joining, guys.